Hey everybody, Economic Ninja here. Hope you're doing great. Got a warning about PayPal, Venmo, and other cash payment applications. A U.S. financial agency, and this is the news story title, and comes out of, where is this out of? I've never even heard of this store. Phone Arena. Phone Arena. That's an interesting company or news agency name. It's entitled, U.S. Financial Agency Says If You Have Money in PayPal or Venmo, Get It Out Now. And they're talking about third-party payment apps that are not insured by FDIC. And let's go into this. It's about the banking crisis, and it does bring up some very, very interesting points. It says a few weeks ago, the U.S. banking system saw three banks, Silicon Valley, Signature Bank, and First Republic Bank, all fail after runs on these financial institutions from customers with uninsured deposits who pulled their money out as quickly as possible. And late last week, a report issued by the Consumer Financial Protection Bureau warned those with cash stored in non-bank payment apps such as Venmo or PayPal to pull that money out because it might not be safe in the event of a crisis. You might retort that the Federal Deposit Insurance Company insures bank accounts up to $250,000, and you'd be 100% correct. But the money you have in Venmo or PayPal is typically not in a bank account and is most likely not covered by FDIC insurance in the case that something bad takes place. For example, if there is a run on Venmo and PayPal and your money cannot be obtained, most likely you'll be out of luck. Now, it says here that some consumers are not aware that funds they have in their payment app account are not insured. The CFPB does say that there are some options offered by Venmo and PayPal that will result in your funds being insured. For example, if you open a PayPal savings account through the company's banking partner, Synchrony Bank, funds in that account would be covered by the FDIC. With Venmo, you might qualify for FDIC insurance if you deposit money to your account via direct deposit. Use the cash a check feature or use your Venmo account to buy or receive some cryptocurrency assets. In this report, the CFPB wrote, we find that stored funds can be at risk of loss in the event of financial distress or failure of the entity operating the non-bank payment platform, and often are placed in an account at a bank or credit union and lack individual deposit insurance coverage. Consumers may not fully appreciate when or under what conditions they would be protected by deposit insurance. I think this is very important, and the reason why is because there is a lot of money in Venmo and PayPal. Matter of fact, a lot of Venmo and PayPal are the go-to choice for third-party payment applications to settle deals from companies to sellers, buyers and sellers. There are people like on Teachable. Teachable uses PayPal, is the company that I use to put my online courses on. And so when somebody pays, an affiliate, it gets paid through PayPal. So that's their payment, right? They also pay directly to your company or to yourself if you're doing, which is a great side hustle, by the way. If you want to, if you know how to teach, start your own course and go sell it. I mean, it's a great way to teach that or to make money from your skills. But my point being is then how you get paid. All the money's going into PayPal. And what if there is a run on PayPal? What if people start to cause an issue there? So how do you protect yourself? Well, like they suggest, PayPal has an option where you can actually put it into an actual bank account, a savings account with their bank that they use, Synchrony Bank. So that would be a good way to protect yourself, right? And that's the thing with today's banking panics that are going on. PayPal doesn't know when or how all of a sudden the news gets out and people start pulling money out of control out of their account, and they go, holy cow, what's going on? And they have to stop, account withdrawals. So you have to be concerned about that. It says here, some payment apps make money by investing the funds you leave in those apps. When you think about it, that's pretty much how banks make a lot of their money, right? And I wouldn't blame PayPal for doing that. But what happens if those investments go awry? Now, I'm not saying that PayPal does it, but it's saying here that some of these companies do. It says, since they're not paying you any interest on this money, interest earned on the bonds and other debt they invest in go right to their bottom line. Payment apps that do this have no incentive to get you to transfer your funds to the linked bank or credit union, leaving you holding all of the risk when they reap the reward. If you're not sure if you have coverage, your best bet is to pull the funds out and deposit them in an insured account until you can speak with someone at your payment app to verify whether your account is insured. Funds stored in a payment app are at higher risk than funds deposited with your insured bank. And that makes sense because if a big payment app company went down, and think about this, it says right here, while there's no option for holding an insured balance in Google Pay, Apple Pay, funds are eligible for pass-through insurance if the customers register the Apple Cash account with Green Dot Bank. Note that the CFPB says that the funds kept in the payment app are at higher risk of loss than if the funds were kept in an insured bank account or credit union. So you think about it, if you have Google Pay or Apple Pay, are they prompting you to go and put this into a certain type of account that is insured, or aren't they? You have to think about this. In this day and age, things can happen super fast because with the dawn of technology and how fast information moves now, this isn't like 1929 where you had to hear about a run on the bank from your neighbor that heard it from their neighbor and that time delay. Now you could get an alert on your phone that's beeping your phone, vibrating in your pocket, you pick it up and it said there's a news alert, there's a bank run happening right now and stocks are falling. And it's going to cause you to panic. And all you have to do, you don't have to get into your car or on your horse and buggy and run down to the bank. You get on your app and go deposit or withdraw. And it means panic can ensue so much faster. And that's why it's so important to be prepared. How do you get prepared? Like I've been saying before, I've been saying this for 2 years now, is you have multiple bank accounts. You have multiple accounts that are insured. And one of the ways to ensure that they're insured is to have them in savings accounts that are not attached to any other account. Have them in different types of banks, regional banks, small local banks, credit unions, and then big national banks, international banks. And the reason why is for people like me that actually do business outside of the country, I need that. I need the ease of being able to move funds, wire funds very fast, and then be able to get money very fast in my accounts when I need liquidity. And so that's why it's so very important. I also have a part of my money in gold sitting outside of the account. I'll put a link to companies that I work with that I trust because I've used their services and I like the way they do business. But that's just me. I have gold as well. I've got silver. But then I also have cash, and I have cash sitting in different various forms and places so that if I need it fast or I need it for an emergency, it's there. Point being is that these are the things that you need to think of now before the panic. And I want to remind you, the banks that failed, the 3 banks that failed, have now equaled more losses than all of 2008 combined. It's a big deal. But really why it's such a big deal and you don't see other banks falling, remember what happened in 2008 in the spring? Bear Stearns closed their doors. They crashed. They failed, right? And that was a big deal, but nobody cared. Nobody I knew in my social circle cared. I was running around warning them all. But it wasn't until the fall that the larger part of the banking crisis took effect. So I want you to realize that we are entering the Lehman Brothers moment going into this fall. We've already seen the Bear Stearns crash, and the Bear Stearns crash is bigger than all of 2008 that sent us into the Great Recession. Get ready for what comes in this fall and leading into 2024 because you are going to see all kinds of opportunities. And it's going to get scary, but it's going to also get really exciting if you're ready. So guys, be prepared, not scared. That's what Ninja Nation's all about. And with that being said, the Economic Ninja is out.